Hello everybody, it's Larry Each with your weekly rate update for the week of July 31st. It was a busy week, so I'm going to jump right in. This week we had a measure of inflation, the Personal Consumption Expenditures, the PCE report, the Fed's preferred inflation gauge. Good news on this report, last month's was reported at 2% core inflation, which strips out food and energy. This month it actually moderated slightly to 1.9%, showing inflation is not growing, but actually staying flat to slightly declining. Great news for home loan rates because any whiffs of inflation increasing will cause rates to increase as well to outpace inflation. So that was definitely good news for the housing market. We also, the Federal Reserve met. They do a two-day meeting. Once that concludes, they always issue a policy statement and rate guidance. So for the Fed funds rate, they did not raise the Fed funds rate this meeting. That is expected in September's meeting. So we'll keep an eye on that as that approaches. As far as the statement, the Fed was very upbeat on the economy, definitely talking about positive things. They changed some guidance saying the economy is growing at a strong pace, which was seen as definitely an improvement over their previous language. They also mentioned consumer spending, which as we've been seeing in these reports has been very strong. They said that that's grown strongly. So a couple good things on the economy from the Federal Reserve. The last big report was the unemployment report. The jobs report's always a big one. The number of jobs created in this report decreased slightly below the what was expected. The unemployment rate improved slightly. The unemployment rate dropped to 3.9 from 4%, which was good. The economy's going well. The jobs are going well. Average hourly earnings, which is a kind of an inflationary component inside the jobs report, that remained stable, which again was good news. Not increasing, not decreasing, but remaining stable is definitely good. On the whole, as far as the week goes, mortgage rates basically were flat. There was a lot of geopolitical stuff going on as well, but I didn't want this thing to run too long. We'll maybe touch on that next week. As far as housing reports go, pending home sales, they were above estimates, and I think the increase in the pending home sales was due to an increase in inventory. We haven't seen that in a while. Inventory has been so constrained, it's slowing down home sales. And if you look at the year-over-year numbers, pending home sales are down about 2.5% over last year. Case-Shiller Home Price Index, great report on measures home price inflation, seen as an important report, very on the accurate side, markets believe. Nationwide index was 6.4% national home price appreciation. Looking a little closer to home, Los Angeles is on the report as well as San Diego, both of them over 7% inflation. Vegas just kind of jumped out at me, over 12% home price appreciation year over year, and maybe I should buy real estate in Vegas because I've never had that rate of return on my investment in that town. So that's a quick roundup for this week. Thank you guys very much for watching. Comments, questions, let me know. I'm here to help. Thanks again.